All right, Sunil Mehta and R.K. Bansal also joining us this morning. Gentlemen, thanks so much for being with us. We're tracking, of course, the moratorium case, the heavy interest on loans and how it continues to rise as well as the tenure goes up. The Supreme Court will be hearing the matter on a possible interest waiver today, and we've been discussing the implications of that for banks as well. Sunil, thanks so much for being with us. What are the financial implications? I mean, reports are indicating the hit to the banking sector could be as much as 2 lakh crores, while on the other hand, there is a case also building for that waiver on interest.
Well, you will appreciate it is not only the amount quantifiable thing which is to be talked about. What is more important is banking system and its impact for a long-term repercussions on the entire banking system. Like interest is an integral part of the banking system. Bankers are financial intermediaries, and as a financial intermediary, you take money from the depositors and you keep it in trust, and then you lend it and you earn interest, and out of the interest earned, you pay to the depositor. So if the bankers are not in a position to collect the interest from various borrowers from whom they have lent, then how will they be able to honor their commitment for the depositors? So there will be a serious challenge for the banking industry in terms of this system, because the banking system survive on the basis of deposits as well as for the credit, and the interest commitment have to be honored at both the sides. Second thing that is most important is banking sector. The banking sector is already now poised for growth. The finance minister has already announced a lot of packages, and the banking system need to be very strong at this point in time to push the economy, which is reeling under pressure because of the COVID and multiple other factors and the international factors. So if the banking system gets weak, they are not able to realize their resources, they are not able to realize their interest which is due to them, then how will they be able to meet out their challenges for payment of deposit? One, then it will definitely impact their profitability, so that will impact their capital and their capabilities to further lend and to support the ongoing economic growth which the government is planning to do. So I say it's not only a matter that how much amount it will impact. As a matter of principle, if this is not accepted as a principle that interest should be continuing, we can defer it, we can find out the timings when it is to be realized. Then ultimately it will create a serious crisis for cash flows for the banking system, a crisis for the systemic risk, and that may weaken the entire banking system for the future, because tomorrow there will be some calamity in some part of the India, and taking clue from this decision, somebody will say because there was a flood in Kerala, so you should not charge interest, or there is a famine in some area, so you should not charge interest. Okay, banking system will not charge interest, but then how will they honor their commitment to the depositor? And almost every citizen in the country have some deposit or the other deposit, and they are with the banking system. So it's not only a financial issue, it is basically a system issue. And because the bankers are financial intermediaries, and I think the Supreme Court will definitely take a positive call in this, because they understand that these things have a very long systemic repercussions for the times to come. So in my opinion, it's a matter of fiduciary responsibility of the bankers to their depositor, a responsibility for the economic system. So not charging interest during moratorium will be fatal to the banking industry.
All right. Mr. Bansal, let me bring you in on that as well. Now, the Indian banking capital is approximately 15 lakh crores. Total loans under moratorium are 39 lakh crores. So, I mean, the kind of capital requirement this would raise, should we see a waiver, would be huge. What's your view on the issue?
Good morning. I think as Sunil ji has explained, no banking system anywhere in the world or country can say that we will waive interest. In that case, our depositors are ready to waive interest. It will not happen, because that will be having a big repercussions. Whenever we have seen some of the waivers, whether in agriculture sector, but mostly that bill has been paid by the government of the states or center. So a complete waiver in this scenario is not possible. Maybe we can talk of some restructuring. I think central bank RBI is also looking at that possibility. But that doesn't mean that we will waive interest. In case somebody needs some relief, somewhere maybe interest rates could be tweaked, the repayment schedules could be tweaked. Otherwise, there is no way that a banking system or a financial sector, like what will happen to NBFCs? They have taken loans, suppose if they also have to waive interest, it's not possible. So a complete waiver is not possible. Somebody has to pay for it. Either you go for a complete commercial way of looking at things. If some company not working well, finally then it becomes NP and there could be a problem and there could be some reliefs. But in normal, we can't say that we will not charge interest. Then you should also be seeing the liability side. And the liability side will include a lot of depositors, middle income groups, senior citizens. So it's not possible that we don't pay interest. So I don't think this discussion actually can be put in this way that you can do waiver of interest. Maybe if you have to look at some relief, maybe some scheme or somebody has to pay for it. So either governments or, frankly speaking, government also doesn't have so much money available that you can pay, you can waive interest and that interest can be paid to the banking system. So it's not possible in general. Case-to-case approach can be looked at it. Some cases we may have to defer the interest and recover it, as Sunil Saab said, that overall it can be part of a restructuring scheme.
Sunil, is there some kind of middle ground which can be actually struck? Maybe a lower interest rate on the residual part of the loan, matching the repo rate perhaps. Do you think some sort of an arrangement can be reached upon?
I think you are pretty well aware that our central bank is already working on these lines to reduce the interest burden of the entire ecosystem. And in the process, the reverse repo rate and repo rate both have been brought down substantially during the last 1 year. I think it's at 4 times there was a reduction, and it is one of the lowest being at the 4%, and 4% repo rate is one of the lowest in our banking system in India. Looking to that aspect, I think the bankers have also reduced their rate of interest in most of their loan. In 3 tranches, they have also reduced and their MCLR have been brought down substantially. And there were the corresponding corrections into the interest to be paid on the depositor also. Even the smallest saving scheme has also come down with a reduction in rate of interest. So I think the entire ecosystem is already working to reduce the interest burden of the assets that is on the loans, because the moment the interest burden is reduced, our Indian industry, India systems become more competitive in the entire international banking scenario. So I think the process is already on. Our regulator is proactively working on it. They are injecting liquidity, they are reducing rate of interest, and there have been policy corrections a number of times during the last 1 year itself. So it indicates that yes, the system is geared up to reduce the cost of the borrowers.
Right. Mr. Bansal, what is your own thought on whether or not some middle ground can be reached?
See, middle ground is same. Like say if we have to give some relief in the interest rates, but you can't be having a general scheme like this. If the companies which are working well and they can pay the interest, you unnecessarily should not give just a waiver just because you want to give a general waiver. It has to be seen in that case to case. As Sunil ji said, interest rates have come down substantially. I think if you really see the last 2-3 years, and recently last 3 months rather, what RBI has done, I think interest rates have come down almost by 3 to 4% already. It's almost 1/3. So that 1/3 relief has already come. And then we can look at some restructuring scheme whereby we can give some time as lenders for interest payment, because it's more of a cash flow problem. Now we have to really examine, it is a solvency issue, it's a liquidity issue. If it is a liquidity issue, it can be tackled by delaying some payments and giving some reschedulements. But if it becomes solvency issue, maybe in some industries this may happen. So then we have to look at that particular sector or industry, a different type of scheme, whereby banks have to give maybe far larger or longer repayment schedule. Interest rates have to be reduced substantially, and in that case, some portion could be converted. That has to be looked at a restructuring scheme, like say maybe for airlines, hospitality. I mean, depends on the industry specific. Maybe for some, you need some relief in these sectors. But you can't talk like in general. It's just 2-3 months cash flow impact is a liquidity issue.
Mr. Bansal, now we can talk about the entire banking system and how if you don't pay the depositors, then it's a breach of trust. Similarly, if you don't, similarly, banks should not be forced in this case to really take a haircut in terms of the total interest repayment. I understand the entire economic and the legality of the challenge here. But what are the chances that if there is no waiver, Mr. Bansal, given on the interest front to borrowers, you could actually see a spike in the NPA cycle, which just dismisses the complete scope of recovery. Right now, by giving a waiver, you can be reasonably assured that the principal loss is not going to be large. But if you don't give a waiver, the challenge is that there could be a large delinquency and a large principal loss also for banks.
See, in banking industry, you can't differentiate between principal and interest in that way. That's why we said that maybe in interest, some rate relaxation could be given, but that has to be seen case specific or sector specific. If you just say that a bank will, let's say, 100 lakh crore loans, the bank don't recover interest, that means you are talking of for 6 months also, you are talking of 5, 6, 7, 8 lakh crore. So it's not possible for the banking industry overall, and then it will be certainly misused by each and everyone. You can't just say that we should not recover interest. It has to be looked at overall as an industry specific. No industry can work, no financial system can work in the world like this, that you say that will not recover interest unless somebody is ready to foot the bill. If there is a specific problem, then maybe some schemes have been announced by the government of India or state governments or by the regulator. But banks cannot be expected to bear this entire burden if there is some problem. But that, as I mentioned earlier, if I go back to my earlier point, it has to be seen whether it is a liquidity issue or solvency issue. So if some sector faces solvency issues, maybe banks will be forced in any case to give reliefs, whether it becomes NPA or whether it doesn't become NPA. And if you don't charge interest just by calling it that it is not NPA, we are not really doing justice. It is the NPA if the company cannot pay interest for 1 year. I mean, you can't say that it is a standard asset. It has to be looked at from restructuring perspective and follow the restructuring guidelines of the regulator, which are likely to be maybe some relief may come in that.
Mr. Mehta, closing comments from you from my side. Somebody has to take a haircut. Either government will bear a loss or banks will bear a loss, or in this case, the borrowers will have to take a hit. Do you think somewhere government needs to come up with something different, something out of box in order to ensure that banks are taken care of and the borrowers are also not hit? I don't know if I'm able to get my message out here, but historically we've seen that when a crisis like this has happened in the past, whether it is GFC crisis or other economic and other financial crisis, the government has done a lot of heavy lifting in terms of taking the hit.
So I think government has got its own limitation. Whatsoever the government hit the government will take, ultimately, indirectly, it will be passed on to the citizens only, because the government doesn't have any independent sources of revenue. They have the revenue only from the taxes, and the taxes will be again loaded onto the population, which is already suffering, to the citizens of the country and the taxpayers who are already having an impact of this COVID. So I don't think it's a vicious cycle that if the government start bearing it and then it will be resolved. So the government will ultimately have to pass it on to the citizens in the form of taxes. So if we try to sort out this issue, it can create a very ethical crisis in the term. Then everybody will start looking for, whenever there is any issue, they say that the government should come forward or the banker should bear the brunt. So it's a business. Business is always a part of taking risk. So you always take all type of risk. When there is a good time, you start earning more. At that time, nobody tells you that whatsoever you earn more, you should come back and give back to the society. But whenever it's a time, it's when you go and the earnings are less, then at least something you can shell out, and then you can compensate for what you have gained in the past. So what I mean to say is, its impact on a different sectors of the economy will also be greatly different. Some of the sectors might have done very well during this period. For example, the personal consumption has not gone down, so food items and all that, the groceries and all that, they were going out smoothly. Agriculture produce were going on smoothly because everybody was consuming the food and that was available. And then there are different sectors like in IT sectors, because digital systems have worked very well during this time, so they might have got additional traction in terms of the more businesses. So this economy has got impacted in a different way. Some people were gainer of this period, because during this period they might have increased their capabilities, and they might have increased their delivery lines because they were open and they were able to do activities. Then secondly, there will be some sector which will be greatly hit. For greatly hit sector, definitely the RBI can come out with some restructuring scheme where bankers, besides reducing the rate of interest, can give them the longer period of time for repayment of their dues. And there can be certain sectors where the interest can be just deferred and can be realized in long term. So what it could mean is, like today, if they were making a margin of 20%, tomorrow they may be making a margin of 15%, maybe something which they have lost. They may take about 5 or 6 months, 10 years, or 1 year or 5 years, depending upon each sector. So banking system can give them that time to recover that losses. And maybe if not that the entire thing in the lockdown has gone down, some of the demands have been deferred. So the moment the lockdown is open, people start coming to the normalcy, those demand will again come up, like marriages which were not happened now will start happening that time. The purchases which people have not done consumer goods now, they will start happening that time. So there will be multiplication in demand at that point of time as against the normal demands which were happening earlier. So that will take care of this deferment. So deferment will provide them right now the comfort, but they subsequently, when the sales pick up, and they may pick up in a greater volume than what they were earlier, so then they will be able to make it up these losses which they have suffered during this point. So I think it's on a case-to-case industry and segment basis. The entire ecosystem will have to take a call. If some segment may definitely need some relief in terms of interest reductions, maybe in terms of restructuring, in terms of longer repayment periods, in terms of additional capital infusion and optimization of their resources. And some of the sectors may require just a very temporary breather of 6 months, which the RBI has already provided in terms of moratorium. And the RBI has also permitted creation of a FITL, that is a funded interest term loan, so that the bankers will be funding the interest cost also, which can be recovered in the next 6 months. So there can be ways of supporting the economy that are already available in the existing ecosystem of the banking sector. Our regulator is already proactive on it, and they have started announcing a lot of measures to support the industry and the sectors. I think industry sector wise also, at IBA level also we are looking at it, and at the government level also they are also looking at it. But to say and generalize that the bankers should not charge the interest and they should not recover the interest, then what will happen to our liabilities for payment of the depositor? Whether any of the depositor will be ready to accept a lower rate of interest than what was committed at the time of accepting the deposit, whether we can reduce the rate of interest.
Thanks so much for joining us this morning, Mr. Bansal. I'm afraid we've run out of time, but do take your point. Sunil, thank you as well, and we'll see how this plays out in the courts. We're going to take a very quick break. Back on the other side.